Welcome to our YouTube channel, The Pro Readers. Susan has finished her college. She was in science section. After result, she didn't get admission in medical university and now she is very disappointed. Her aunt came from other city to meet Susan's family. She saw Susan is sad as she was not able to get the admission. Her aunt suggested her to transfer in commerce, but Susan does not know anything about accounting. Her aunt, being an accountant, explained her main components in accounting and started with balance sheet.
Balance sheet. Balance sheet has two sides, asset on one side and liabilities plus capital on the other side. Both sides of balance sheet are equal. Unlike science, accounting has only one equation, that is assets is equal to liabilities plus capital. Components of balance sheet. Assets. Long-term investment. These are carried by the company for a period of more than 1 year. Investment is in the form of stocks, mutual funds, and bonds, etc. Company earns return on investment in the form of dividend, capital gain, and markup income. Assets. Fixed assets. Fixed assets contain land and building. Fixed assets are essential to build a business. For instance, manufacturing company needs land and building to install its machines for production and build offices and warehouses. Assets. Current assets. Current assets include cash in hand, cash at bank, raw material, finished goods, and receivable from customers. Cash is necessary to meet day-to-day operations. Cash at bank is required for payment to suppliers. Raw material is used to manufacture a product. Finished goods are the final products sold in the market, and receivable from customers is the amount due from customers on credit sales. Liabilities. Long-term liabilities. Long-term liabilities are mostly bank loans. These loans are provided by the banks for investments in long-term projects, like import of expensive machines, setting up new factory, etc. Being long-term, these are due for payment in more than 1 year. Banks record markup income and companies record markup expenses on these loans. Liabilities. Short-term liabilities. Short-term liabilities are bank loans and payables. Bank loans. The bank loans are provided by the banks for meeting working capital requirements. For instance, payments to supplier of raw material, salaries payment, and portion of long-term loan which is due in next 1 year. Payables. Payables are due to the suppliers of raw material. These are paid within 1 year. Capital and reserves. Capital is the initial amount of money invested by the owners for starting up the business. It also includes amount invested by shareholders of the business. Reserve is sum of all profit or losses earned by the company. It also includes funds which are transferred from profit but are not distributed to the owners of the company and are kept separate as per legal requirements or for long-term capital expenditure projects. Difficult terms 1. Susan listened all the components of balance sheet explained by her aunt. She asked meaning of few difficult terms and noted accordingly. Working capital. Working capital is part of cash management. It is the estimated amount that shall be received from customers and to be paid to suppliers. The difference of both cash inward and cash outward is the net cash. It is calculated on monthly basis. Difficult terms 2. Stocks. The companies listed in stock exchange invite people to do investments. The investors are called shareholders. In return, the shareholders receive cash dividend or capital gain. The stocks are traded in stock exchange of a country. Bonds. Bonds are traded in debt market and invested for earning markup. Difficult terms 3. Dividend. The amount of money paid by the company to its shareholders. This is the return on investment, markup income. It is the amount received from the issuer of bonds. It is the return on investment on bonds, capital gain or loss. This is the difference between sale price and purchase price. It can be positive, which is gain, or negative, which is a loss. Difficult terms 4. Markup on bank loans. This is like a fees paid to the bank for the use of amount loans provided by the banks. Bank loans can be for short-term period, which are reported in current liabilities, or for long-term periods, which are reported in long-term liabilities. Difficult terms 5. Mutual funds. Mutual funds issue units to investors. These units can be directly bought from the mutual funds as per market rate. Funds invest money in different markets like stock exchange and debt market. Mutual funds give cash to the investors as a return, or investors can earn capital gain by selling the units at higher rate or higher price. She understood all the terms and also noted in her laptop, but was concerned about income and expense. Her aunt told her that income and expense is second important component in accounting, and she shall explain it tomorrow. In this video, we have explained components of balance sheet. It is useful for persons who want to know about balance sheet, science students who are opting commerce, and new commerce students. For simplicity, only main components of balance sheet are explained.
For more videos, keep watching our YouTube channel. For accounting and regulation articles, visit our website, theproreaders.com.